Ladies and gentlemen, a very good afternoon to all of you. It gives me immense pleasure to welcome you all to the CITYBANK Limited's Earnings Disclosure Q1 2022 web event. While scheduling the event, we attempted to choose the most fitting time slots so that we could accommodate most of the participants, both from local and foreign vicinity and time zones. I'm Safina Ahmed Tori, your host for the event, welcoming you all today. Thank you all very much for joining us. Today, we have here amongst us Honorable Managing Director and Chief Executive Officer of the CITYBANK Limited, Mr. Masroor Arifin, Additional Managing Director and Chief Business Officer, Mr. Sheikh Mohammad Maroof, Additional Managing Director and Chief Financial Officer, Mr. Mohammad Mahbubur Rahman, and Head of Internal Control and Compliance, Mr. AKM Saifullah Kausar. As a bank, we take pride in engaging the investment and community in our journey and believe in transparency and accountability in disclosing our performances and actions. The bank's criteria for success have always been not only the bottom line numbers, but also the milestones set towards becoming the most complete bank in Bangladesh. And we have come this far diligently following the mantra of service, trust, with all the support of our community team and shareholders. With that in mind, we are gathered here today to present the contemporary financial position and forward-looking strategies of our bank. We shall start with our AMD and CFO, Mr. Mohammad Mahbubur Rahman, presenting the financial performance, followed by our Managing Director and CEO, Mr. Masroor Arifin, addressing all of you, and finally end with our question and answer session. Before we proceed, I'd like to inform you that we have opened our question and answer portal, which you can see at the bottom right corner of your screen. You may place any relevant question in the window during our presentation. We shall try our best to address them in our question and answer session, depending on the time available for the program. Ladies and gentlemen, I now request our AMD and CFO, Mr. Mohammad Mahbubur Rahman, to start with the financial performance presentation. Over to you, sir.
Thank you. Hope you can see the presentation. Yeah. Welcome to our Q1 2022 earnings disclosure. Assalamu alaikum and good afternoon. So I'm starting with our loans and advance and interest income. As usual, actually, we'll show our balance sheet, important balance sheet component and related component of the income statement, so that you can compare our balance sheet performance as well as our business performance simultaneously. So if you look at the loans and advance in first quarter, it increased by 13.9% compared to from the end of 2021. When the market actually grew by 10 to 11%, our loan book grew by 13.9%. But in the first 2 months, our growth was a little bit slower. That's why our average growth was 7%. So that's why actually in interest income, you can see that our interest income actually grew by 5.66% compared to the first quarter of 2021. Also in first quarter, we have seen a little bit decline of yield on advance from 6.72% to 6.4%. But we have actually got the momentum at the end of Q1 by having more loan growth compared to the country's credit growth. And because of the current market scenario, we hope that we'll have much higher loan growth in rest of the year, and yield on advance will definitely improve going forward. So here you can see that we have been growing in loans and advance in a consistent manner year on year. And also you can see that we are diversifying our portfolio by giving more emphasis to other areas other than corporate. In 2018, when our corporate book was 60%, now actually our corporate book holds 51%. But that doesn't mean that corporate is having big growth. They are growing at their normal pace, but we are growing much faster in SME and retail. So SME is now 20% of the total book, and retail consists of 15% of the total book. and commercial is having 9% share in our portfolio. In deposit, we are growing quite satisfactory despite having a tight situation in the market. Our deposit grew by 11.7%, almost 12% from the end of 2021 and reached 315 billion taka. And probably you know that the interest expense is actually growing because the cost of deposit is growing. And you also probably know that the FDR rate is now tied with the 3-month average inflation rate. So FDR rate has increased from, if you compare with the last year when the FDR rate was around 3%, the current FDR rate is around actually 5.7 to 6%. So despite actually having a very huge hike in the FDR rate, we could actually manage our cost of deposit with a insignificant increase because actually our current and savings account is growing quite faster. That is a part of our strategy, and we are actually we are constantly growing in current and savings account, and we are actually basically giving more emphasis to have actually more growth in current savings accounts, and especially with low cost deposit, so that we can manage our interest cost within our budgeted within our target. So here you can see that how actually our strategy is paying dividend, when actually current and savings account used to have 36% of the total deposit book. Now we are actually having around 45% of the 45% current and savings account in our total deposit book. So it has grown quite significantly, and we are giving, as actually I have told earlier, that we are giving more importance and effort to grow our current and savings account more. And so here actually in this slide you can see that the movement of our yield on advance and also cost of deposit and net interest margin. Here you can see that the yield on advance is declining actually continuously. And we could manage our cost of deposit quite successfully in last year. In 2021, it declined. We actually reduced the cost of deposit quite significantly by having more current and savings account and low cost deposit, which has increased a little bit from 2.5% to 2.9% because of the increase of FDR rate, which is now tagged with the inflation rate. That's why the net interest margin, we call it NIM, has declined a little bit from 3.9% to 3.6%. But we are quite hopeful that our yield on advance will increase further because there is lots of scope to increase it, and at the same time, we are also hopeful to manage our cost of deposit by having more current and savings account. Investment, we are growing our investment as actually the interest rate of our treasury bill and bond is increasing. That's why we are actually giving more fund for investment purpose. So our investment has grown by 26% from the end of 2021 and reached 76.3 billion taka. But if you look at the investment income, it's showing actually decreased by 4.3% from 1.06 billion to 1.2 billion. But in first quarter of 2021, we booked actually one-off capital gain of 450 million taka. So if you exclude that one-off income that we had last year in first quarter, actually our investment income has grown quite significantly because we are having very higher return from our treasury bill and bond, and as we have invested very high yield in actually high yield bond, bill and bond, we are hopeful that it will also give a more gain in coming years. So this is another core area of CITYBANK, that is our trade business. We are one of the leader in the market, and you can see that how actually our export and import business is growing. Compared to quarter one of 2021, our export business has grown by 34% and reached $631 million. And on the other hand, the import, which has grown by 63.7% and reached $1.5 billion. So and this has contributed very high growth in our commission, exchange and brokerage income from 1.2 billion taka to 1.79 billion taka with 48.6%. Actually, this growth would have been much higher if we didn't have actually decline in our fees income from retail and other areas, where actually the central bank has actually imposed some actually reduced rate. Because of that, that fees income has declined by $171 million. If it hadn't happened, then our income would have actually increased much higher. Citibank is a market leader in credit card. You all know that, and we are constantly growing in credit card business. Our card issue has increased compared to Q1 of 2021 to by 22%. And for example, in first quarter of 2021, we have issued 13,800 cards, and in this year we have issued in this first quarter we have issued 16,800 cards. So it's growing, but we are having little bit decline in bill business from 10.4 billion to 10.2 billion taka, because we'll see much higher growth in from second quarter, because the Novoborsho, that is the Bengali New Year, and Eid al-Fitr, the one of the main actually religious celebration that actually happened in Q2. So you'll see actually higher growth in bill business from Q2. So that's why in first quarter, the other operating income, which basically consists of the card income, actually declined a little bit by 3.4%. And reach 557 million taka. So whatever actually I have explained so far, that is the interest income minus interest expense, then commission income and other operating income, which actually basically all together actually we get this revenue. The total revenue has increased by 8.1% compared to the Q1 of 2021. From 5.6 billion taka to 6.06 billion taka. And against this revenue, our operating expense, which has actually increased by 14%, from 2.7 billion taka to 3.09 billion taka. Actually, because of we have hired actually around 800 people at the end of last year. As we are increasing our SME business, our retail business, card business, we have recruited people, and we have also given actually increment to our staff because of the and also we have invested heavily in our IT system. So that's why actually our operating expense has increased by 14%, and because of 8% revenue growth and 14% expense growth, our cost to income ratio has increased from 48.4% to 51%. Here actually you can see the breakup of the operating cost, which I've already explained that because of the recruitment and increment, the staff cost has increased, and other operating cost has increased because of the investment in IT, which will actually lead this bank to further digitization. And we have opened few sub branches and regional SME units, actually, which will actually give more business in coming years. So this is a kind of investment for the time being. So so operating profit, actually considering the 8% revenue growth and 14% operating cost growth, actually we have actually slight growth in operating profit from 2.8 billion taka to 2.9 billion taka in first quarter of 2022 with 2.6% growth. Then the provision, we have actually, the provision has increased by 8.7% from 853 billion taka to 850 million taka to 926 million taka, because the volume of NPL has increased from 13.9 billion taka to 15.3 billion taka, though the NPL ratio has declined because our loan, we are having very high loan growth. But we have kept actually additional provision, which we have actually built last year. So far, actually, we haven't used any additional provision to cover this NPL. So our provision coverage ratio is around 88%, which declined a little bit, but still we are actually maintaining additional provision that we have built last year. And going forward, we'll build more provision to cover any unforeseen risk in loan book. But so far, we think that our NPL situation is within control, and hope actually the ratio will become better in rest of the in coming days. So after deducting provision and income tax, our profit actually declined a little bit because we have actually quite similar same kind of operating profit, but our provision has increased, and on the other hand, our tax has increased because last year we had capital gain from investment. This year we didn't. We don't have any such kind of capital gain, so that the capital gain is tax free. So this year we don't have any tax free income so far in first quarter, but definitely we'll have capital gain and other gain in the later part of the year, when the tax effective tax rate will reduce further. But so far in first quarter, our profit after tax has declined from 1.03 billion taka to 883 million taka, with 15% decline in profit. And which actually this profit also consists of the profit of our subsidiaries. Here you can see we have 4 subsidiaries along with our parent company. So our subsidiaries income, for example, the Bucharest income profit has declined by 21% from 81 million to 64 million taka because of the capital market scenario, where you know that the capital market index is quite flat, and turnover has reduced, and because of that, the Bucharest net profit has declined. Our CITYBANK Capital Resource Limited net profit also declined by 60% because last year they booked actually a significant amount of service income from several bond issues, and actually this kind of income will come actually in the later part of this year. So in first quarter they don't have this such kind of income, but we are actually but several bonds are in the pipeline, so hopefully they will cover it up in the rest of the year. CBL Money Transfer, it is a wholly owned subsidiary company in Malaysia, doing remittance business. Their profit has increased a little bit with 14%. And City Hong Kong Limited is a finance company in Hong Kong. It's a new company. As they are very new company, they have a little bit loss, but their loss has reduced, and we are also hopeful that they will actually they will start giving profit again in this year. So after actually with this kind of actually profitability, our return of equity definitely has declined. In first quarter of 2021, our return of equity was 13.4%. Now it has declined to 10.8%. Our return on asset has also declined from 1% to 0.8%. Our earning per share actually declined from 1 taka to 0.8 taka. But with 1 taka earning per share, we ended 2021 with 5.1 taka earning per share. So we are hopeful that with this earning per share in first quarter will gradually increase in the later part of the year, because if you look at our trend, always we have actually lower earning per share in the first quarter, and then it gradually increase, and the profitability increase from the second quarter, third quarter, and fourth quarter. So we are hopeful that we'll be able to actually make up the deficit so far we have in first quarter. Book value, we have the book value of the bank is 30.71 taka, and this is the last slide of my presentation. Our capital adequacy ratio has declined from 14.2% to 13.2% because of the increase of our loan book and of balance sheet position. But we are going already actually we have already issued 7 billion taka worth of tier 2 bond at the end of in this month. So that's why actually that is not actually included in the first quarter of this year. So after considering this bond, actually our capital adequacy ratio will improve by 2%. So we'll end with a good strong capital adequacy ratio. And other bonds and equity products will soon be added. So after considering all these things, we are hopeful to have stronger capital compared to this. So with this, actually, I'd like to end my presentation. So after that, our CEO will actually enlighten us with more actually strategic information about the bank. Thank you all.
No. Shall I begin?
Yes.
Sorry. Okay. Thank you everyone. Thanks to all our investors and other well-wishers, patrons of the bank, and the people present here with me, our Chief Business Officer and AMD, Sheikh Mohammad Maruf, our CFO who just ended his nice deliberation on the Q1 profitability and certain business initiatives, and also our head of ICC, Saifullah Kausar, who is here, and Safin Ahmed Tori, our master of the ceremony. Thanks everyone. Mahbub has already highlighted, Mahbub meaning our additional MD and CFO. He has already highlighted that why the EPS is down. He has talked about why the PAT is down. Basically, the EPS is down, that because the profit after tax of the first quarter is down by 15% from last year's first quarter. So those have been explained already, but again, just to recap and before I go into the strategic intention of us to recover from it and even to do better than last year, before I go into that, I also would like to say my own summary of why profit is down by 16 crore taka, which is 160 million BDT. Number one reason is that in the first quarter, historically, I have checked all last 10 years of data has been checked by me, that always it happens that in the first quarter, we typically do little bit worse than last year's first quarter. Maybe there are many reasons. Maybe holiday season falls into that. This year, Ramadan also fell into that during the first quarter. These are the reasons. These are the external to the bank kind of reason. There's a cultural reason. People are on leave and all that. Budget preparation and all takes also certain time. After completing a successful year, then people are a little bit also in the rest mode. Those are cultural reasons. But actually, if you look into why the 16 crore profit was less from last year, the first reason is, as Mahbub said, cost of deposit has increased, because the rate has got tied up with inflation rate of the country. That got effective from end of August, and the impact has started coming in. If you look at the first quarter, the impact basically means that cost of deposit of our more than 30,000 crore taka, 35,000 crore taka deposit books cost has increased from last quarter to this year's first quarter by 0.1%, meaning 10 basis point. 2.8 has gone to 2.9, which basically means, 80 million BDT, impact of 8 crore taka in Q1. So, 16 crore taka was total reduction number, of which 50% was contributed by simple 10 basis point increase in cost of deposit. But I must say that we are successful. We have been successful in keeping the CASA mix at 45%. The second big reason is that in the last year's Q1, there was certain big gain from the treasury bond selling. So that we did last year, what was impact of 450 million actually came, and it was totally tax-free in the last year's first quarter, 45 crore taka. And this year, that became only 4 crore or 40 million, that means 41 crore or 410 million BDT earning quarter to quarter last year and this year, you see that that drop is there. So this is the reason number 2, which is a very big reason. 410 million earning was less, which last year we could earn because of the sales of certain government securities during the first 3 months of the last year. Number 3 reason is that that the government's regulators' new fee schedule of charges, and also the new LC commission structure, new loan processing fee structure, card fee structure, everything came into effect at the end of the last year. And the impact we felt this year, the impact was of roughly 7 crore taka or 70 million BDT we lost if you compare it from last year's Q1. Impact reason number 4 is that overall admin cost also increased because what happened is in the first quarter of this year, we had to increase or we had to give the salary increment to all our nearly 5,000 permanent employees. So 7% we gave, the inflation adjustment or normal salary increment. So there also an impact of 210 million taka or 21 crore came in Q1 alone. And also we had to undergo or we had to face other inflationary effect on other expenses like rent, like depreciation, like repair and maintenance. And there also we had to endure an impact of 60 million BDT or 6 crore taka in Q1. And number 5 reason is the provision expense. Provision expense basically it has last year first quarter it was 853 million BDT. This year's first quarter it was 926 million BDT. So basically you can see that there is an impact of around 70 million BDT, but very good thing is that basically it has happened due to the growth in loan in that UC category, unclassified category. And now I come to the last reason of quarter to quarter comparison wise 16 crore taka less profit or drop of EPS. The last reason is the tax provision reason. Mahabub also mentioned that, but I'm very clearly summarizing it for you that first quarter of last year, the tax expense was 1 billion taka, which is 100 crore taka or 1003 million taka. And this year that has gone up by 160 million, which is 16 crore taka. Because last year's, I already said that in the first quarter of last year, there was 45 crore taka gain on security sale, which was tax free. And this year, nothing of that sort of that magnitude happened, and tax increase, tax provision had to be 16 crore or 160 million more. So now that part is done. Now I'm sure you all know. I gave you the reason, which is cultural reason, that in first quarter, normally things go a little slow due to certain cultural holiday reason related, and this year coupled with Ramadan, this was a bigger reason. That is there. We need to change this culture. Of course, we are trying to bring change to that culture of not doing so well in Q1. But typically, Citibank wakes up from Q2, and then 3 and 4, Citibank started flying, and Citibank ends the year at a very thumping, groundbreaking by making those kind of results. So other than that, I've given you 6 reasons. Tax provision reason, one of gain was not there from securities, that reason. Securities sell, cost of deposit increased reason, the reason of impact of the fee commission new strictures, that reason. I have also told you about the overall admin cost going up, that reason. And I have also told you that provision expense has gone up, but nothing to worry because we had to keep higher provision because loan booking of loan asset has really gone up. Now the positive stories, the negative side is explained. I think actually nothing is negative. It's a little drop of 16 crore taka profit, which is negligible. We have great positive stories, which CFO has already talked about. But again, to sum up that one from in my own way and style, is that if you look at the first quarter very carefully, you will see that the management profit which is operational profit or the trading profit, the profit which is under our control, that has actually increased. That has increased by 8 crore taka from last year first quarter and this year's first quarter. 289 crore taka has become 297 crore taka. That actually also tells you that main thing that has happened is the 7 crore taka provision increase and 16 crore taka tax provision increase. Actually, so 23 crore taka has actually happened here, and in certain areas we have done well. So net we have done 16 crore taka less. But bottom line remains that the management profit has increased, which basically means that the regulatory reason related issues has played its part, which is not in our control. Tax is the biggest issue, and tax provision had to be increased, and that is in the hand of regulators. So I assure you that with the first quarter where operating profit has increased, this particular one line should tell you that on our side, on the side that is in our control, we have done even better than last year. And if you look at a few other very good signals, end of the day, with the lowering of interest rate by the government regulation, still you will see that interest has increased. Interest income has increased by 280 million, and commission and exchange earning has increased by 589 million. Basically, 28 crore taka has increased from interest income compared to last year's quarter one, and 58 crore taka has increased from commission and exchange income. Now, on the negative side, I have already told you, which I will not again go into that. Interest expense has gone up because of cost of deposit increase. Now, on one thing I must tell you, Citibank, if you really look into our P&L account carefully, you will see that our dependency on our earning from loan interest has reduced, because our capacity of earning from non-interest income area, which is some total of commission and exchange income, fee income, then also investment income, meaning the interest that we earn from government securities, those income has seriously gone up. If you look at this, listen carefully. If you see this, in first quarter, the total income of the bank was 606 crore taka, 606 crore, of which interest income is 268 crore and non-interest income is 337 crore. I do not know if there is any other bank industry which can be proud of such a stunning number, which is that 55% of our earning is now coming from non-interest income. Meaning, it was always a dream that our fee income and commission income and all this should be bigger than interest income or near to interest income or close to interest income. We are already there. We have exceeded interest earning already in first quarter. Out of 606 crore, 45% has come from loan interest. So basically, it's not that the loan book has reduced. It's just that regulation have limited our capacity. So immediately we have changed our gear and course, and we have seen the greater results which is coming in. Exchange in earning is increasing, commission earning from LC is increasing, investment income is increasing from interest that we gain from government securities, and fee income is under definitely pressure. Mahbub has explained all those, but fee income, because again regulation has put a lot of strictures onto us, but we are new avenues we are finding out. Our customer base is increasing, so overall earning from fee is also increasing. So this is one. Another thing I must say before I kind of start concluding my speech is that one good thing about this year, you will see that Mahbub also has mentioned, but very briefly, if I may explain it in one line or two lines, is that we are witnessing yield increasing in the government securities. That basically means that whatever investment now we are making in government securities, That will increase our investment income from government securities, meaning why? Because the yield is increasing. In like for example, in last, in next 1 or 2 months time, 800 crore taka of our invested government securities are maturing. Immediately, we will reinvest it in the high yield category reinvestment. So here also, as compared to last year, automatically our earning from the coupon interest and from the government securities overall yield increasing, that will be higher. And another great thing is happening for Citibank is that, you will see Q1, first quarter's exchange earning. Mahbub has mentioned this, but again, let me summarize it in my own way. We have made a huge exchange gain. It was only 180 million last year first quarter, 18 crore, and this year you have seen it was 70 crore, 700 million. So 180 million to 700 million of exchange gain. Why that is happening? That is basically happening because internal flow of dollars is there, internal supply chain of the bank, dollar suppliers, our export customers, booked by corporate and commercial banking and medium segment banking. Export customers are there, and also our remittance business is doing good. So internal flow is good. And also our treasury strength in the money market, in the market where dollar buy and sell happens, is very good. And also our corporate bank has great strength in giving us good importers who are ready to buy those dollars at the rate that we want them to buy, whereby we can keep some margin. Even if we buy dollars at high rate, we are selling dollars at even higher rate. That is reflected in the ability of Citibank, which is reflected in 18 crore taka income of that from that particular area in this Q1 that has gone to 70 crore taka, 180 million to 700 million. So that I believe this year that will continue. It will be a significant growth area for the bank. And now, before I end, I will only talk about, I will not talk about much. You have already heard me many times in the earning disclosure of many quarters. I will simply say that the biggest initiative will be headed by our Chief Business Officer. Yesterday, the bank has held its monthly business meeting. We have decided that is the LCD area, low cost deposit area. He is coming up with a great plan encompassing every business unit of the bank, mainly retail and card division, and also women banking, and also Islamic banking, and also corporate banking, and also corporate cash management. Combining all these, we are launching a great LCD or a low cost deposit initiative. He is going to lead it. We'll roll it out within a week or so. This is one. And another is that we are going to big repricing of loan book initiative. So that repricing, which market will accept it as logical, that kind of a logical repricing is going to happen in Citibank. Actually, that's going to happen from the start of the next week. So these are the biggest initiatives. On the rest, other areas, exchange area, investment earning area, I have talked about. I have talked about the initiative that the cost CEO of the bank, the new cost CEO of the bank is our DMD and CIO, Aziz, CTO, CIO Aziz. He's the head of that. They are looking into all the cost areas. We will keep on bringing down the cost. As I said that, overall now, this is where I will end. I will end it here by saying that just, when you are judging Citibank's performance of first quarter, because of that extraordinary tax provision that we had to keep this year in Q1 due to not being able to earn like last year's gain from security sale. Because of that, actually this 16 crore drop you see. But if you look at the management has done much more than last year's first quarter's management profit or operating profit. We have done 80 million BDT more than last year's first quarter. And I have already highlighted which are the areas where we are doing even better than last year. We are doing great in off balance sheet item. We are doing great in loan booking. We are doing we will be doing fantastic in the managing deposit cost by Maruf taking up the LCD, the low-cost deposit initiative, and we'll be doing also fantastic by relooking at the interest rates charged to customers under different loan categories, which is already I mentioned repricing. So overall, if you ask me, I believe the future is looking bright. I believe that if you look at our now, the question may come like, what is the asset quality? If you look at the NPL ratio, last year's we started the year at 4.9. Today we are at 4.7. So it is rather decreasing, and it will continue to decrease because our customer base is good. Now, if you ask me why you say so, in which way you can say that it is good, just look at one figure. We started, and we gave loan deferral due to COVID to 72 billion BDT worth of loan were deferred. That book is now has come down to 41 billion, which is only 12.5% of Citibank's loan book. So that also shows that Citibank deferral enjoying customers are also paying. Now the outstanding has come down to 41 billion, and all these customers are also more or less, I would say, regularly paying. I do not foresee, as Mahbub also said, any kind of shock in the loan provisioning side. We are adequately, even the provisioning coverage ratio has increased. Only if you look at only 3 years back, I remember distinctly we had 72% provisioning coverage ratio. Now, if you look at today, we have 89% provisioning coverage ratio. Within this year, we'll take it to 100% provisioning coverage ratio. So overall, these are the areas Mahbub mentioned about capital. Okay, let me just finish here now talking about the capital. If you look at the main capital, tier 1, 8.5% must be kept. Today, I am at 9.8% bank's capital solo basis. If you look at overall adequacy ratio related, 12.5% regulation. Today, I am at 13.2 CITYBANk on solo basis. So capital is also good. Another great thing, I must thank the finance team. We have done 700 crore taka of new tier 2 bond issuance. It's an 8-year bond, 7 billion BDT or 700 crore taka. Very interestingly, you will know that the day we launched it, against 7 billion, we received expression of interest of around 10 billion, 1,000 crore taka. It's like within 2 days, our 700 crore taka received 1,000 crore taka expression of interest. So that is also getting closed with very soon. That will add to bank's profitability. Also, last year's retained earning is a sizable one. Getting into the retained earning of this year, plus last year's 12.5% stock dividend is also going to be added to tier 1 capital of this year. So overall capital side is also, I believe that we are on a good footing, and our CBO, Maruf, is also trying for bringing in new foreign equity as an equity partner in Citibank. Earlier, that 5-6 years ago, IFC came. We are looking into that, an international good, reputable, business or multilateral names. Inshallah, hopefully, that may take time. On the capital side, inshallah, that will be another feather in the crown. Overall, this is where I end. I believe that everything is going on good. Everything is going on well. In the first quarter, operating profit was higher, which is fantastic, and higher than last year first quarter. Now I will not repeat myself. I wish all the best to the 2 great initiatives the business teams are taking up: the LCD initiative, low-cost deposit, and also the repricing of loan book initiative. The rest, inshallah, already we are doing well. We are doing fantastic. Last year, $6.6 billion of LCs were opened. This year will be much, way above $7 billion. Thank you all. Thank you. Thanks, everyone.
Thank you very much, sir. Now, ladies and gentlemen, we have reached our question and answer session. I'll be reading the questions one by one, and we will try to answer as much as we can within our stipulated time. So the first question I'm going to start with is the burning issue of the season, and it is, what impact Citibank expects to face due to recent dollar rate hike?
Maru,
Sir, you need to unmute your.
Unmute.
Yeah, thank you very much. I think it's a very interesting question, and probably it's further strengthened Citibank's position in the market, because talking about dollar, that if you see our balance sheet and our trade flows over the last 5-6 years, you will understand that Citibank's payment side is well balanced through its strong remittance and export, right? I mean, I'm sure our CFO, Mr. Mahabub, showed that we have achieved 34% growth in their export. And I must mention that in the same quarter, we have 36% growth of remittance as well. And where the country is struggling to maintain its remittance for in the same pace, where Citibank achieved a growth of 36% in the remittance. Having said that, the point I'm trying to mention here is our trade position, our balance of payment is well balanced. Still now, we are probably one of the very few banks we are maintaining a long position in dollar. That means we have more dollar in our open position than the claim on the payment side. So, and this situation is helping us to strengthen our fee and non-funded income. Our MD has mentioned that in this quarter we have a strong FX revenue, and this is I mean, our strong trade flow and export remittance is an outcome of is an outcome of this strong non-funded FX revenue. And Citibank, I only can say that we are taking and enjoying this position because our balance sheet is and trade flow is well balanced. We are not facing any issues due to the dollar crisis, because our exchange position is long. Thank you.
Thank you very much, sir. Next question we have is, do you expect to see any resolution in 9% lending rate cap?
I think, you know, like there are a lot of speculations. Citibank, we don't work on the basis of speculations. There are a lot of market rumors that, you know, due to these many other things happening in the macroeconomic area, which you all are aware of, there is a feeling that interest rate cap will be lifted. I think we shouldn't comment on that. If that happens, fine. If that doesn't happen, Citibank is still, you know, earning much more than where the cap was not there, when the cap was not there. So, you know, it doesn't concern us.
All right. Okay. Next question is, what percentage of loan book is stressed from COVID-19?
So it can be actually answered in a one way that we have actually given 7,000 crore or 72 billion worth of loan under deferred book into 2020 actually, and now the that book has come down to 34 billion taka, from 72 billion to 34 billion taka. So it has become half, and so whatever stress we have out of this, that has been shown in the NPL. So we don't have any special stress book under the deferral loan.
I mean, just want to add that Citibank portfolio, I mean, COVID didn't impacted negatively our portfolio. Whatever the delinquent or stressed account we have, that was detected well ahead, and we're managing that. We have not any added stress book because of COVID, and that says that the process of selecting loans and accounts is very much standardized. That's why we can say this, that COVID, due to COVID, we don't have any stressed account.
Thank you. Next question is, what is loan book growth target for 2022? Where do you see net interest margin by the end of the year?
Marshall,
We have the budget.
Yeah, our loan book target actually was actually 12%, but it will vary because if we see that that the interest income is less compared to the our targeted one, then we'll go more probably. But we have to also consider our capital adequacy position. So we are happy with 12 to 13% growth. And interest growth also targeted to grow at that same level, actually 10 to 12%.
Yeah, in the first quarter, if you look at the real numbers, loan book asset grew by 12%.
Yeah, yeah.
So I believe, I don't have the right number with me. Mahbub is right. I think 12 to 13% loan book growth is expected. So, yep.
All right, we have another question with the relevant situation going on now. Market inflation is rising. How Citibank will manage low-cost deposits?
Chief Business Officer will answer that. Yesterday, we spent half a day on this. So please, Maruf.
I mean, thank you very much. I think our MD and CEO mentioned during his speech that we are looking into the low-cost deposit, and if you look at our balance sheet and the deposit growth in the first half, you'll see that we grew by 3,300 crore deposit in the first quarter, of which 50% or even more than that was in CASA account. That indicate that we have a strong market position, brand value, which has helped us to achieve the growth in CASA and maintaining the growth in CASA. And we are coming up with a very strong plan for next 1 quarter, keeping in mind the plan for the next 3 years, that how we will increase our CASA position. And the bank is looking at that down the road 3 to 4 years time. The CASA contribution to the deposit rate should be to the tune of 65 to 70%. So we are working toward that. Right now we are at the level of 45%, and we are rightly placed in the market to achieve that expected CASA growth of 65 to 70%. And if you can achieve that, we can very successfully manage the cost of deposit and maintaining our NIM. Thank you very much.
Thank you. The next question is, what is the long-term plan with Islamic banking business? Is it mainly to lower cost of fund for the bank?
MD or?
No, so what is the question, Tori? Long-term plan for?
Islamic banking business, is it mainly to lower the cost of fund for the bank?
No. That's a wrong view. That is one of the major reasons that Islamic banking will help us to enter into a different kind of retail segment. And but that is if you talk too much about that, basically that will take away the overall picture from it. The overall picture is that Islamic banking is Sharia compliant banking, and it must also have its loan arm, its investment arm, its trade arm, and also, like we have already launched American Express Islamic Credit Card. So we are focused into all the traditional business areas, deposit, investment, plastic, which is card, and also Islamic internet banking. So we look at it at a 360-degree angle. Like, we are not only into getting Islamic deposit book and not doing everything else. We are into rather running or building a parallel City Islamic Bank, which is as strong as CITYBANK, conventional CITYBANk.
Right. Thank you, sir. Next question is, do you expect loan loss provisioning to increase further as all forbearances have been revoked by Bangladesh Bank?
Maruf?
So far, the way we look at our book and the balance sheet, I don't foresee that we will be having higher NPLs or provision. As I mentioned in previous question, that we are not experienced or seeing any kind of loan that has been delinquent or that will be delinquent due to COVID. Whatever the stress account we are having, that's due to business reason, and that was dated long back, I mean, before COVID. So due to COVID, Citibank's portfolio, I would say that not that much impacted, and nothing to be worried or alarmed of, because our portfolio is performing well, as our CFO and MD also mentioned that the deferral book is paying us well off, paying on a regular mode. We are seeing good payment from small accounts as well, and our core corporates are paying regularly. So we are, I mean, Citibank's portfolio is not worried about on that waiver clause will be withdrawn or forbearance will be withdrawn. Yeah.
All right.
Yeah, and also I should say one thing, that regulation forced us, or regulation made us compelled to keep extra provision on even performing book. So that is there. We have made that in 2 chunks. Overall, Citibank right now has around 200 crore taka, or little more than 200 crore taka of extra provision we have kept. So that will come handy, even if a loan or few loans or few large loans even go bad. That will come very handy. We are one of those very few banks in the country which can boast that we have kept additional provision of around 250 crore taka. So this is a very big statement. This is a very, very also comforting statement from by a bank management. We have that much of extra provision held in our hand.
All right. Thank you, sir. I'll be taking the last question of today's event. And the question is, for economic recession, many people lost their job and business. What is the strategy of Citibank for managing NPL?
Maruf.
Okay. I mean, I think it's I need to go a little back to answer that, because as you know, the Citibank is last 5 years diversifying its portfolio. That means we are distributing a risk in different areas. I mean, corporate was 60%, that has come down to 50 or below 50. That means we are diversifying the balance sheet. We are growing in the area of small and retail. And if you look at our the balance sheet, the NPL ratio, other than our medium segment, all are below 2%. That means the process, the selection of criteria, the selection area has paid us well, and that has resulted in very low NPL in our entire portfolio. Secondly, in corporate, the segment we are growing right now, we are growing in line with country's domestic economic growth, the country demand, and based on the factor that we as a bank we see that the market will grow. So we basically in corporate we invest in the area of infrastructure. As you know, that we are one of the largest investor in power sector, and power sector most of the payment are guaranteed by government. So basically very much as good as a sovereign risk. We are growing in the area of RMG. As you know that the way RMG is performing, the outlook of RMG is very good in this country. Even during COVID, the RMG grew significantly. We are in the area of domestic economy and domestic consumption, mainly in the area of infrastructure. So the reason I'm saying all this, because in this particular area, Citibank is investing with the top tier client. That means that we are not going even below a bottom or mid segment. We are in the top tier client. With the kind of client base we have, with the kind of selection of criteria industry within the corporate, and overall diversification of overall bank's asset portfolio, we think that we are well positioned. The portfolio selection and growth, NPL will only expect to go down in time. I'm sure that the bank has a plan to bring the NPL to the tune of 3% in next 5 years time. So knock on wood, I mean, I don't foresee that Citibank's NPL will go up because the strategy that we have taken 6-7 years back is paying us off, and we are sticking to that strategy with a diversification within the asset book and diversification within the corporate helped us to manage NPL and will help us to bring it down in future as well. Thank you.
Just here also, since Maruf talked about diversification, if you look at 2018, corporate book was 62% of bank's lending book. If you look at today, corporate book is 50% of bank's lending. So basically, this is one of those few or rare local bank where corporate lending book is 50% of bank's lending book, and rest 50% is comprising of retail banking book and a small microfinance book and credit card book and medium segment book, which is small, but those kind of small ticket loan items. So Maruf is very right. Our diversification is one of the beauties of our loan asset book. It's a great beauty.
Thank you. That was nicely addressed. Well, ladies and gentlemen, we have reached the end of today's earning disclosure event. Before concluding, let me inform you that the recorded version of this entire event will be made available in the same web link as per the live program very shortly. Those of you who missed the live event or want to skim through it at a later time will find the full event documented here. The financial presentation will also be available on Citibank's website under the Investor Relations section. Thank you all very much for your interest in the Citibank Limited. Allah Hafiz and stay well.
Thank you.
Thank you. Thank you.
Thank you very
Nabu,
much.
Tori.
Thank you.
Thank you, Maruf. Thank you, Saif. Thanks, everyone. Thanks.
Thank
to
you,
all
everyone.
our
Thank you. Thank you, everyone.
well-wishers,
See you
investors.
next quarter.
Thank you. Great. Thank you.